Gold rally denied, I guess. Is this good? Is this bad? Sometimes I forget which team we're on. So how about that Friday trading session? Gold is down $80 from 9-month highs. It's more than $50 on Friday. It's a big drop if you track prices on a daily basis. And I knew non-farm payroll was coming. I knew it was hitting Friday, so I was paying attention, but I saw the spot price drop before I saw the jobs numbers. It was a straight line fall, and something big has to happen for that kind of drop, and it did. The job numbers, they're pretty crazy. Analysts expected 187,000 new jobs, but the report showed 517,000. So almost too good to be true. I saw that written somewhere. I agree. Unemployment rate now 3.4%. So Friday's drop, complete 180. And it's important to recognize here that even with Friday's drop, gold price is still above the trend line. I'm not going to drop into technical analysis too far, but if you look at the 50-day moving average, it's showing that gold should be at about 1857. 200-day moving average is 1800. Gold closed on Friday at 1865. Now, credit to the 2023 price rally goes to demand. I'm going to get into that in a minute. But if you take the week as a whole, you take the month as a whole, I guess, gold is actually doing really well. If you look at Friday's drop as a dip, guess you saved some money on a purchase. I made a purchase, and I don't know if it's actually a dip yet or not, but I was happy to see that the all-in cost of an ounce of gold was in the 1900s rather than above 2000. Now, I was expecting a slow start to 2023, and gold came out swinging. I mentioned in my last video that gold demand throughout 2022 was the highest it's been in over a decade, and Q4 was the highest gold demand ever. So some of that was driving price gains, of course, and on top of that demand, the Fed slowed rate hikes down to 25 basis points, and that probably helped, but we're still nowhere near the proverbial pivot. The more important takeaway coming out of Friday's price move is that volatility. Anything could happen the next few days. Friday ended with what looked like a knee-jerk reaction from traders. And as an armchair onlooker, those big moves, they tend to correct themselves a bit. But with a 2-day trading gap, I guess it could go either way. And I'm not smart enough to say which. Now, last week aside, what I was expecting was a quiet start to 2023, more like 2022, and then a boom later in the year when the Fed pauses or pivots on rates. That would put a hit on the dollar, push gold up. That all makes sense. But there's also this idea out there that somehow maybe the economy could pull off a soft landing and that gold prices just really won't have a chance to take off. Now, normally I just wouldn't say that's likely. But when you see jobs data that seems too good to be true, 517,000 new jobs when 187,000 were expected, you have to wonder what other surprises might start to creep into the news. And the effect that these reports have, it's very clear, but the criteria used for those reports, it's kind of obscure. So the 2023 rally hit its first block, its first denial. It looked pretty surprising on a daily basis, pretty volatile for gold, but it is still up 3% for the year. And on the upside, we get the whole weekend now to shop for gold at a $50 discount from Thursday. Now, looking forward, it'll be interesting. Next few days are going to have a really big impact on trend. I don't think there's much more to say. Simple topic, so we can call it good there. Let us know if you bought this drop, or if you plan to, or if you're one of the people who bought on Thursday, like Tom Hanks looking through the hole in the floor in the money pit. It's the mental image I get. I've been there. Let us know. And while you're in the comments, be sure to hit the like button if you found any of this interesting. Be sure you're subscribed with notifications turned on if you'd like to see more on the topic. And if you're still here, thanks again for watching. I always appreciate your time. Take care.